Welcome to ISE's Equity Index Weekly Outlook, a weekly outlook on ISE and other industry indexes, hosted by Patrick Seresna, a derivative market specialist and investment manager with extensive expertise in options and the broader derivative markets. ISE trades options on more than 15 proprietary sector indexes, as well as broad-based indexes and a variety of licensed benchmarks. ISE continually enhances its trading systems and develops new index options products to provide investors with the best marketplace and investment tools to trade smarter.
Hello and welcome to the ISE Equity Index Outlook for February 6, 2012. This is Patrick Seresna. As always, we start off with a chart of the S&P 500 using that SPDR exchange rate fund symbol SPY. We were looking for a market consolidation to occur, and we're actually anticipating that it could have gotten a little bit deeper, even as low as the 127 to 129 level on the downside. But as soon as that jobs number came out, the market really just bullishly burst higher, and it's now heading right up into the overhead resistance levels where the 2011 highs have been. We anticipate overall that the market should remain relatively optimistic in the upcoming months, but the market should find some significant overhead resistance as it approaches this 135 to 137 level. More than likely we will have even a few more positive days as the market gets nice and deep into that zone, and we certainly can't even rule out the possibility that the market even beats a little bit to a higher high. We still anticipate in the bigger picture that there should be some sort of a consolidation within on the upper zone, and then a pullback, probably still back to a 127 to 129 level at some point before we again attempt a break to new highs. In the bigger picture, we don't believe that that will be a major market top yet, and that any pullbacks will be just buying opportunities. Next year, I want to take a look at the ISE Natural Gas Index, which is symbol FUM. There are a number of ETF products which you can trade for on the natural gas index to participate. Now, you can see here that we've more or less had a downwards consolidation. It continues to consolidate along the 105, 108 support line that we've drawn in here. At this juncture, this is a make it or break it zone, because if the natural gas index breaks down below the zone and doesn't immediately recover, it really does open the window for it to retest its lows from October. There simply has been no buying in this area, and it doesn't look any technical indication that momentum is going to come here anytime soon. Now, with that said, if there was any significant bullish push above the 112, 113 area on the upside, it would have brigged a descending trend line that you could draw along the tops, which may spur some short-term buying, but we would need to see some significant technical improvement before we would start becoming more optimistic on this index. Next year, I want to take a look at the ISE Global Engineering and Construction Index, which is the symbol CVL. And with this product here, we've now seen a substantial push higher to the first overhead resistance target. And while we marked off the 255 to 260 level, it's worth noting that the highs of 2011 actually occurred around the 270, 275 level. So if this market still has a few more days of upside potential, then we may have marked a little bit too low of that overhead resistance. There is definitely room for this to still spurt another $5 to $10 higher if the market maintains momentum. But we do again anticipate that at some point there will be a profit-taking cycle in this from wherever the final high comes in. So we're very short-term optimistic, but with one foot out the exit door as the little corrective pattern will begin. Again, in the bigger picture, we're not looking for a market crash to come off of these highs, and so probably any good solid 1 week correction that finally begins will probably emerge as a buying opportunity. Next year, we're going to look at the ISE China India Index, which is the ICK. This is an index of all China and India stocks, and basically we now have had the market rally right up to the highs of October, as well as some of the key highs in August after the first initial drop in the market. There will be a little bit of overhead resistance here, but the price action that we've seen in this index has been relatively optimistic. Whenever a market can fully recover from its last wave of selling, it usually means that the bulls have regained control of the marketplace. So again, very similar to all the other indices, we're looking for short-term overhead resistance, at some point some sort of corrective pattern, and then continuation bullishly into the latter part of February and March. Next year, we're going to take a look at the ISE water index, which is a symbol HHO. The water index, when it broke above that 84, 86 overhead resistance level, really just opened the window for it to head right for its overhead targets near its 2011 highs, which come in around the 94 level. Now that we're trading around 91.60, and we're within dollars of the highs of 2011. Again, we're looking at a situation where there's going to be a little bit of overhead resistance on the first go about here, but again, it's probably will remain bigger picture bullish after pullbacks. Next year, I want to take a look at the ISE Global Copper Index, which is the symbol ISC, and as well, copper is now finishing its measured move on the upside with some overhead resistance levels up in the 440 to 460 level. Actually, in some of our other work, we have that support line just a little bit lower. In the bigger picture, copper in the next 10 points here on this index should bump its head into some overhead resistance levels as well. In the bigger picture, we're not as optimistic on commodities as we are on the broader markets. It's likely that once copper finds a high up here, that pullbacks will probably have rallies only come back to its previous highs. So we're far more neutral on copper than we are on the other indices, but nonetheless, it shouldn't be bearish immediately. Finally, I want to take a look at the ISE Cloud Computing ETF. And when we look at the nice bullish breakout, it now has been really following through on completing what we call a measured move on the upside. Really at this stage, the measured moves line up perfectly with the highs of 2011, or at least the summer highs. And so really at this stage, we think that the Cloud Computing Index could even tack on another 50 cents or even $1 on the upside under that huge momentum that the NASDAQ has. But overall, we'll probably be still waiting for some sort of a solid corrective pattern to accumulate into weakness going into what will probably be an optimistic late February to March period for the stock market. That was your ISE Equity Index Outlook. Thank you for joining me.
Thank you for participating in this week's session. Please join us again next week. For more information about Patrick Ceresna and to sign up for free index options trade alerts, visit www.optionsource.net. To learn more about ISE index options, visit us at www.ise.com/indexoptions.